Hi, this is Andy Flipiak in Toronto for the week of July the 25th. 2 weeks ago, the Bank of Canada raised interest rates 1/4 of a point. Now, they claim that the strength in exports and business investment will more than offset the problems that we're seeing currently in housing and possible retail sales. Now, with tariffs being implemented around the world by the Trump administration, this explanation may be a bit of a stretch. What may be truer is the fact that the Bank of Canada must stick to the narrative. And the narrative currently is that the global economy continues to strengthen and central banks will pull liquidity from the system over time. Now, last week I read a fantastic article where 3 analysts now claim that the Federal Reserve will in all likelihood have to change the path of the unwinding of their balance sheet. When the Fed announced that they would be rolling off their balance sheet, they effectively claimed that this was carved in stone and that they would be making no changes to the process. Currently, the Fed is allowing $50 billion of bonds either to be sold into the market or roll off their balance sheet, which in effect means they are selling bonds, taking the cash, and making the cash disappear. So the Fed is taking $50 billion out of the system on a monthly basis. Now, these analysts in the article claim that they cannot continue to do this. With the world seeing the US dollar strengthening, there's simply not enough dollars in the world to facilitate the current status quo. Also, with the US running a $1.3 trillion budget deficit this year, they're going to need a lot of US dollars to fund that. So, for market participants, one of the most important things is the narrative. And as long as the narrative stays true, that things are good and that the central banks can continue to tighten, markets will probably hold together. The question is, can they continue to tighten given what we're seeing? Thanks for watching.